do that. For today now, we are going to look at our lecture. It's about SMT divergence today. It is what we are going to look upon. Yes, yesterday we last talked about at around 8 p.m. So those who were in the private mentorship, you saw it. So today I'm going to also highlight on what things we studied yesterday. Let's have a look on it. So what is SMT in full? So that's the first point. What is SMT? So SMT, this is smart money technique. Okay, so that's the point. SMT means smart money technique. That is it. So what is smart money techniques, or what are these techniques, and how do we see these techniques? You could be around there asking yourself that how could you know that maybe the market is going to reverse, maybe the market is going to move in a sideways direction, maybe the market is going to be bullish, maybe it's going to be bearish, or how do you tell all those things? So we can see that maybe in the near future we could see that maybe the smart money technique, it also acts as a tool. So apart from using indicators, we can also use it as a tool to know market, the future market reversals in the market. In most cases, it is mostly used by ICT traders, and sometimes it's also used by SMC traders. Okay, these tools, I think if you put it in line with the market structure, then I think that's where results starts coming. Okay guys, so don't forget to share this to your friends, those who are offline, and don't forget to like and subscribe to the channel as well of it. Okay guys, so we are going to take some basic examples about it, and we shall also look at how does SMT occurs. Okay, let's take a point. So how does it occur? So that's the most important question. You as a business person, how does it occur? So we have looked at the introduction. So let's say how we shall look at two types. We shall look at a bullish SMT. So we are going to look at a bullish SMT versus a bearish, so versus a bearish SMT. Okay, so how does it looks like? How does it? So that's the biggest question. How does it look like? So remember, these are smart money techniques. So in every business, so in every business we have techniques. So you will realize that every successful person has his own technique. All right, so in the real world you have to get your own technique. Then that technique is your age. Okay, so every person is where he is today. Maybe he's running that business for 10 years, he's running the business for 20 years, because he has his own technique. Okay, so we are also, if you try to relate the business world to the trading world, so you are going to see that these things, they co-remerge. Okay, so we have to look on the similarity. So if you look on the other side of it, and if you bring it to the trading world, so you are going to see that maybe at some point we are sharing these similar factors. Okay, so if you look at the factors, we share them. Okay, so if you look at the other side, so you should have a strategy to survive in the long term. Okay, so that's the real world of it, the real world of the business. You should have a strategy as an entrepreneur. Okay, so as a trader, you are also one of the entrepreneurs. Why? You started the business to make profits, but you have to maximize profits and you have to minimize profits. Okay, that's it. So that's the major aim of running a business, but you can't avoid the losses along the way. Why? Because that really shows that the business works. Okay, so the first thing that the business is working is when you are encountering losses. So as an entrepreneur, you should ask yourself, how do you encounter losses when they come? So that's the biggest question as an entrepreneur. So how do you encounter losses along the way? So do you run? So do you quit? So that's the question now. You encountering your losses, yeah? So let's base in trading now. Okay, you're a trader, but you don't want to make any loss. So it means that that business doesn't work. So in any business, we should see losses. And if your business is not making any loss, then that is a scam now, because you are maybe you're not running a business. That's why we have to balance the books. We have to see the negative part and we have to see the positive part. Okay, but for the positive part, those are profits. Okay, so the major aim is to now manage your losses. So as an entrepreneur, you have to manage your losses. So you have to manage those losses, but you though profits will come as the end product, because profits are the end products. So we have two end products in trading. Two end products in trading. We have profits and losses. So once you execute that trade, what are the end products now? We have two, profits and losses. So those are the end products. Okay guys, so during SMT, so these are smart money techniques we are looking upon. So let's say, how does a bullish smart money technique look like? So a bullish, we shall say, if we have two correlated pairs, so we are going to see correlated pairs now. Two correlated pairs are like one correlated pair is performing higher highs, yeah, and another correlated pair has failed to perform the higher high, then that will be regarded as SMT divergence. So it is an SMT technique. So we mostly use them for future reversals in the market. Let's say maybe you are an investor at the stock markets, maybe you are in crypto market, you are looking on Bitcoin, maybe let's say you're on indices, maybe you want to buy shares in a company. So these things apply. Okay, you could also interpret it with some bit of maybe economic part of it, so you will see it. So it will help you in well based decisions. Okay, so if you look at this point, so you should have also well based decisions. So you could see it now. A bullish SMT, how does a bullish SMT occur? So that's the biggest question. How does a bullish SMT occur now? Okay, yes. So how does a bullish SMT occur? Now we are saying that, so we are saying that now the market, uh the market, so these are two correlated pairs, let's say Euro USD and GBP USD. So we could say that maybe the other pair is moving bullish, but at some point we shall see dropping down. So two correlated pairs, when the first pair makes higher highs, but if you look at the second pair, the second pair is going to fail. The second pair will fail to make higher highs, so it will begin to do like this. Okay, so this is the second pair now. All right, so this is what we call SMT divergence. So this versus this, you could see it. Okay, this versus this, and you could also see how it is occurring now. So that's the biggest takeaway now. Okay, you are seeing it. So the biggest takeaway, so it's versing. Okay, so we could see, so yesterday I dropped some of the exercises there, so you can also see it. Yeah, so that's the biggest takeaway now. All right, so that's how a bearish SMT occurs. So a bearish SMT occurs when another correlated pair fails to make uh, a higher high. Right, so when it fails to make a higher high, then now what are we going to do now? Okay, yes, what are we going to do? Yes. All right. So when another correlated pair fails to make a higher high, then that is a bearish SMT divergent. Okay, yes, bearish SMT divergence. So just in simple summary, so bearish, it will occur bearish bearish SMT, bearish SMT. Now if you're summarizing, you can summarize bearish SMT occurs when, so if for it occurs when another correlated, so it is correlated pair fails to make a new higher, so a new higher high. Okay, that is it. So another bearish it occurs when the correlated pairs. Now let's take an example. Maybe this is euro. Let's take, maybe this is euro USD, this is euro USD. Okay, again, let's say here this is GBP USD. Okay, so we have seen it is now bearish. So another correlated pair fails to make a higher high. All right, now let's take a look on a bullish SMT. Now how does a bullish SMT look like? So how does a bullish SMT divergence occur? So these are the questions you should be asking yourself, so as an entrepreneur, because you should see this business as a long term. Now just think about it. Okay, time really runs. There's nothing like long time. Okay guys, so just so if you try to think about maybe 20 years back, it is like things have just happened recent. So you are going to realize that maybe time is very short. Why? Whatever happened, if you're thinking of something which has happened 20 years back or maybe 30 years back, so if you try to narrate it to someone, it's like maybe it has just happened yesterday. So that's the power of time. So there's nothing like long, there's nothing like short. Okay, so but whatever, so if we come now in our business, so you have to think as an investor. So you have to think as an entrepreneur in the side of the business. So you have to be expecting the two things you are going to see. Now this is a bullish SMT. How does it occur? So it is going to occur when another correlated pair fails to make a new lower low. So let's say this is a new lower low. It is coming like this, but it now is going to become bullish. Okay, so price was moving like this. Okay, yes, price moving like this. Okay, so we are seeing this is now an SMT divergence occurring. You can see it around here. So we are seeing, so that's the first example. Now let's look at the second example. Also, prices came like this. Prices came like this. Prices came like this. Came like this. So we are saying that for this one, it occurred within this zone. Okay, for this one, it occurred within this zone up here, around here. Okay, so this one, another correlated pair fails to make a new lower low. Okay, yes, for this one it failed to make a new lower low. Now for this one it formed a new lower low, so you could see it. Yeah, so maybe this is 0, this is 0, so you could see. Let's take an example that this is euro USD. Okay, let's take an example like this. Yeah? So this is euro USD. Maybe let's take this is GBP USD. Okay, this is GBP USD. Okay, so you have to also focus on the journey itself, because you have to see things in a long term version, because if you do anything in short term, then you have to ask yourself, then what is keeping you going in the market? So we are seeing some sort of things like this. Okay, so if you try to go live in the practical examples here on the live charts, now we are going to see that maybe let's take a look on euro USD. Okay, euro USD, as we have said, let's begin with it, and let's begin with it. Euro USD, how is it occurring? So if we try to extrapolate this, we are seeing where did it occur. So let's check the month. So in most cases it occurs when the month is either about to end or it's about to open. Okay, let's begin with what? This is March. Let's begin with April. So what are we seeing here in April? In April, when the month was starting, so we are seeing a bullish. So here it appeared bullish around here. Okay, we are seeing that it appeared bullish. So what you're thinking about this after appearing bullish? Now let's put this mark here. Okay, we are going to have also a look on. So this is the 12th of March. Okay, let's have a look on GBP USD, the same day, 12th of March. What happened? So we may see that maybe this one prices were making lower lows, but we may see again another one may have failed. So 12th of March, let's check on 12th of March. What happened 12th of March? So you are seeing that maybe at this point around here, prices, so when this occurs, it is showing that there is a possible strong market reversal. So this is what we call an SMT divergence in the market. So we mostly use this one for long term market reversals. So this is mostly used by the smart money techniques for long term market reversals. So we could also see this point. So you could see that maybe prices at this point was making lower highs. So if we check around also euro USD, we could see that prices again it was doing the opposite. Prices were doing the opposite. So it was making what? Lower lows. So you can see, so it is occurring at the opposite side. So this is 12th March at 8 a.m. So let's also check the time. When did this occur? So maybe this is how you could improve on what? On your trading style. Okay, this is 12. Let's look at AM. 12 a.m. 8 a.m. So 8 a.m. was around here. So this is how it occurred. So you could so we use these correlated pairs to see the future of the market. So this is how the market is, guys. So you could also see the future of the market. So okay, so you can also see the future of the market. around here. Now let's take a point. So let's take a point on it now. Okay, let's take a point on this one. So let's have another example of euro USD versus ZAR USD. So this is silver versus gold. So this is one of the also SMT pairs for correlation. So it mostly occurs when the month is about to end. So let's check the month. When was it? So we could see that around this point, market at around 11 a.m. we saw that the market was making this. After making that, we were what were we expecting? So we were expecting a bullish divergence likely to occur. So bullish divergence was mostly likely to occur in the market. All right, so let's check on ZAR USD 18th March 11 a.m. So let's check on ZAR USD. So what was really occurring on ZAR USD? It is also a major question. So it is 11th March. So let's look for 11th March. 11th March is around where? 11th March. So it occurred at around 11 a.m. Okay, this is around so we should be very keen with the days. So this is 18th March. Okay, 18th March, that's the point. So let's check for 18th March. So it's very important. So where is 18th March? So we also extend around it here. 18th March, 18th March, 18th March, 18th March. So 18th March was around there. So what did we see around here? So we were seeing that prices, what occurred? Okay, this is what we're seeing. Okay, that's what we're seeing. But realize that when two correlated pairs start moving in opposite direction, then that is where an SMT divergence had already occurred. All right, so that's the most cases. We could also see things like this. So around here we are seeing the market is moving like this. Okay, so around here also the same thing. Maybe we could see the market moving like that also. So that's the most important thing. So it means that if you're trading this, your eyes should be really open. Okay guys, so for better financial decisions in the market. So we could see around here, though this graph has failed to load upon it. Okay, so though it has failed to load, but that's how we see it. Okay, yes, so that's how we see it. That's how we see an SMT divergence. So smart money techniques. Now what's the other thing we are going to also talk about? So but these smart money techniques, they work best when they are combined with market structure. Okay, so that's how they work best. Okay, in most cases they are also used by institutional traders. Yeah, so they work also best when there is enough liquidity in the market. In case when there is no liquidity in the market, so this strategy is very hard to find it. And in most cases, for one who is trading high time frame, you could even possibly find it every twice a month. But if you're trading lower time frames, you could possibly be trading it maybe every day, be like that. Okay, that is about SMT divergence. So it mostly does not likely occur. Okay, so what's the next now thing to focus on? So we are also going to focus on the next chapter. We shall also see, so we shall also look for a bearish one. Okay, so we have to look for bearish SMT divergence. Okay, yes, that's how we should also do them. So you keep on correlating these pairs step by step. Yes, but once the setup